Good after good afternoon, man. We're starting off great there. I hope everybody's having a good day so far. Um, this is Brian Caprice from Keep Trading Simple, and we're logging back in today for our current market analysis and identifying potential opportunities for Nadex. I was looking at the top. I can't believe it. It's December 15th. We're halfway through December. 2021 is almost here. And I'm just thinking, I was like, man, what is the last day for Amazon shipping? Man, I was looking at it's like catching up on me quick here. I'm one of those like last minute shoppers, but anyway, hope you guys are having a great Tuesday. For those of you that were here this morning, we've actually had some interesting updates, some rumors about Brexit. And again, some major movement in the pound pairs since this morning's session. So let's just jump right in, make sure we can get everything covered today. So for those of you that are new that don't know who I am, as I mentioned before, I'm the president and CEO of Keep Trading Simple. I am an educator first and foremost, and I want people to really kind of come to these presentations, get some market analysis, learn or think about something differently. Every week, my goal is to give you guys at least one golden nugget that you can get out of this. Maybe it's looking at a different time frame binary, maybe looking at the call spreads, maybe trying out knockouts if you haven't gone over in that realm as well. I've been trading for about 20 years now, and I can say about 28 because it was right in that 1999 kind of tech bubble thing. It makes me seem really, really old. I actually have more gray hair than in this picture, and that baby is no longer, I guess in that picture, she was like 6 months. She was on this morning. Her hair, you guys can see, is like middle of her back. She's now 2.5. So, and both the boys in that picture have somewhat short hair, and it's both down beyond their chin. They went with like the COVID haircut. So, my hair is also a little bit longer, obviously, but it is what it is. I've created a number of different courses for Nadex. So, I'm one of those people that I try to use Nadex to the absolute fullest of my abilities, understanding the pros and cons of each of the different things. By that, I mean the binaries, the call spreads, and the knockouts. There's not many people that talk about call spreads. I feel like I'm one of the only ones. But I feel that every one of the products has a time and a place, and I try to incorporate that into my analysis. And maybe I'll give you some pointers today as far as which one will be best. I'm actually going to start working on probably a new series, I think, and put it on YouTube. And who knows, maybe maybe Nadex will help out as well. But basically talking about where I see the ideal sweet spots for all those things. And, I mentioned it during these presentations, but I think it would be a great little, webinar, pretty interesting to, if you're unaccustomed with maybe the smaller time frames, the 5 minutes to 20 minutes to 2 hours, really when is the best time, in my opinion? So maybe that's something we'll put into the new year and incorporate that in a bit. Anyway, let's go through the agenda for today. Before we begin, let me make sure I cover the Nadex risk disclaimer. I will say, too, as my personal disclaimer, the birds are in here with me today. They've been quite energetic. They actually had an apple about an hour ago, so they're a little bit jumping. I have the cage open, but if I suddenly jump or screech myself, it's because one of them jumped on me and I wasn't expecting it. The little one and the wife actually is home today with a migraine, so I can't put the birds in that room today. So they're with me, so I apologize if you hear some chirps right off the bat. But anyway, as far as Nadex risk disclaimer goes, trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to enter their transaction, including fees. Now, the information presented within this presentation today is for informational education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures, and Nadex is a registered trademark of the IG Group. So here's that magical agenda that I mentioned that I was going to talk about there. What we're going to do is we're going to talk about the upcoming news events. Now, yesterday and today has kind of been just blah as far as, I don't know, as far as economic news releases. Now, obviously, Brexit has been on everybody's tongue the last, I want to say 4 years, but the last couple of weeks have been, we're approaching this deadline. It's here. It's here right now. We've passed the deadline. We passed another deadline. We passed another deadline. We keep passing deadlines, but literally the hard exit, we're right on the cusp of it. So there has been a lot lately, at least in the last 2 days. And again, I'll go over that news in a little bit here with Brexit. The rest of the week, we got a lot of stuff going. So, I'll show you that in 1 second. Then I want to cover the indices. Now, the indices are a very interesting place. And again, I will mention this when we do the analysis. It's year end. People are starting to think about the holidays. There's that S word out there, stimulus. Yesterday, I actually saw some news or information about a stimulus package put forward. I love when they say that everything is bipartisan because it's not going to be. It's going to be one side playing versus the other one. I would find it very hard to believe that suddenly politics won't, be bipartisan anymore. That it will be bipartisan. That everybody will be like, yeah, that's great, let's do this. Some of the stimulus bills we've seen in the past have had, individual party agendas associated with them. Things like climate change. It's like, well, stimulus is not climate change. Let's just stick with stimulus. Come on. But that stimulus word is really kind of affecting the indices right now. Talk about Forex, and right now there's not too much going on. Brexit is kind of dominating that realm. Again, if stimulus comes through, that will affect the dollar, and that will kind of change a lot of the currency pairs. But it's been a pretty interesting currency trade, for the last kind of week, 2 weeks. A lot of a kind of retracement. I mean, just the pound has been up and down and up and down and up. Every single day it's something different. So it has definitely not been a swing trade or long-term trading type market for like the last month or 2 months. So again, got to be kind of thinking differently. Put on your kind of more day trader hat there. And then commodities. Gold had some movement. It didn't quite get as high as I wanted before it started retracing the day. And oil has been kind of a very interesting story. Earlier today, I mentioned that I was going to show you my oil chart, that there was oil was approaching an area, and it actually took a 50-cent drop down. And then since that 50-cent drop, it has kind of rallied back up again. So again, day trading market there, that 50%, or 50-cent drop down, and then 50 cents and a little bit actually even higher than that retracement back to the top side. So some interesting stuff. So first, let's pull right into, and let me see where I got here. I got to find it first. Here we go, right here. Let me make it a little bit bigger so you guys don't have to squint. You can see it a little bit more. There we go. Let's talk about news. Look at this. Nothing. Yesterday was nothing. Today was nothing. And as far as the overall movement, the 24-hour pip change actually is showing that, right? Nothing in the euro dollar. Dollar yen down just a little bit. Dollar Swiss is basically flat. Dollar CAD, a little bit of movement to the downside. And again, a lot of this has to do with oil. Aussie dollar, completely flat. The only thing that has any movement right now is the pound dollar, euro pound, and the pound yen. And again, this is all Brexit. Now, you may say, wait, what happened with Brexit? Well, about 44 minutes ago, there was this big buzz in the last hour. The UK is heading towards a Brexit deal. Okay, I can click this in the new link. We can see it right here, and you can see this is what we heard. This is the rumor, right? That Tory MPs that the UK is heading towards a Brexit deal with the EU. Eurosceptics being reassured they will be happy. So it's like, don't really know what that means. It sounds great, and again, there was a huge reaction, very, very fast, about 100 pips higher. It's a lot. It's a lot. So, what are you going to do? There's not too much, here's the rumor, it bounces, and then all of a sudden, boom, rolls and flips back to the downside. So, again, Brexit has been nothing but rumors. We have nothing signed, nothing in agreement, nothing concrete. And again, that's welcome to trading in December. Besides that, the other hot news, again, you can see here that it's absolutely dominated. One here with Brexit, another Brexit, another pound one, and then again, something else out of the UK, which is interesting that we haven't heard too much about today, that there's a new variant of the coronavirus identified in England. Okay. I've clicked on it, I've read it. Basically, this new variant it's a different strain of coronavirus. They're saying right now that it doesn't seem like it's going to affect any of the vaccines out there, but it's just something kind of to keep, I've mentioned in the past, again, dealing with COVID-19 is a coronavirus. Viruses tend to mutate, and it's already mutated a few times. My personal kind of worry, and not worry, but question that I have, and again, I'm not a doctor of medicine or anything like that. Are we going to be looking and talking about corona vaccinations every single year? What could be the long-term effects of that for the economy? Everybody is convinced that right now, if we take it by July next year, the market will be back on pace. Question is, what if it's not? What if we need to go through a whole nother round of vaccinations next year? As some way of staying ahead of the mutation curve, because unfortunately that's how viruses work. So we'll see. But right now, everything that we can focus on right now is Brexit. All right, that's all the big buzz. Everything is about Brexit. Even down here, even the smaller things in here, it's just everything is Brexit. All right. Now tomorrow, oops. Let me update this. Hold on. There we go. You guys can see nothing today. Just one little speech. Tomorrow, it's chock full of news. There is so much on here, I have to scroll down. Now, most of it is European-based news. It's the flash services and the flash manufacturing for, the euro in general, right? But we have France, we have Germany with the euro, then we have the pound coming in. We also have the U.S. flash manufacturing. Now, this is an interesting figure. Last time you can see that there was a lot of these that were under 50. Now, you don't have to be an economist, and I've said this before. You don't have to know really what these mean, but what you do have to know, and if you have questions, you can always click on them, is understanding that when they are below 50, it's considered a contraction in that arena. So something like a 39 is an absolutely horrible number. It's below 50 and it's pretty low, right? It's not even remotely close, showing us that their services are actually shrinking. And again, this has been a story to everybody that services are having problems. And again, if you think about services, I mean, again, think about what we're dealing with right now. Closures of restaurants, right? Indoor and outdoor dining, things like that, right? Now, manufacturing is obviously, the production of goods and service. Now, seeing that get low, and last time they were both under, again, getting to 50 shows that we're about on par. But again, a disappointment here. And again, if Germany's flash manufacturing drops, again, it's expected to go lower. What if this one's a big drop and it comes down to like 51? What does this show you for the overall European Union? And again, down here, we're at 53 and 41, but a lot of that is driven from German numbers. If Germany's numbers come down, what is that going to do to the overall flash? Could the overall manufacturing flash PMI in the euro go below 50, showing a contraction in their economy? And there's no doubt that they're saying services are even worse. So this is why we're hearing lots of stimulus. Now, jump across to the pound, right? The UK. Their numbers are, a little bit better, right? Shows that their, economy's in a little bit better of a position. But again, it's got to come back above this 50 number for their services. And again, they are starting a new round of lockdowns as well. There was quotes yesterday, actually 2 days ago, I guess, that London is now, new COVID cases are off the chart in London. So is that going to affect it, the services with new additional lockdowns that are being, coming from that? So, a lot of stuff can happen here. And again, this will provide some early morning movement tomorrow. And then we jump into CAD data, retail sales, U.S. retail sales. And again, this number, again, showing that we're having a reduction. This is not good for the economy when you see retail sales going down. Obviously, Christmas will give us a little bit of a perk, but month over month, retail sales down, not a good sign. Okay, especially when the core is down as well. So, and then we have our manufacturing. It looks like we're pretty steady. If these drop below 50, yeah, that's going to be a pretty telling number. But I personally don't think that they will. And then tomorrow afternoon, we have FOMC economic projections. I don't expect them to change anything with the Fed funds rate, but the economic projections will talk about what recovery looks like. Now, it's going to be a recovery for next year, but will the market have a reaction to it? Absolutely. Okay, absolutely. They're going to mention things about what the curve looks like. They're going to mention vaccines, what long-term demand looks like, what inflation looks like, what commodity pricing looks like, right? So there's a lot of things that could be in this FOMC economic statement tomorrow. So this is a release that you need to make sure that you are protected. You want to make sure that you have stop losses in. You need to make sure you understand the products that you are in. These are all big deals, right? Every one of these is a very big deal as far as the FOMC and what they have the power to do. Okay, so there could be some fireworks. Now, the flip side, a lot of those fireworks a lot of times happens in the press conference at 2:30. But right after that, again, news keeps rolling. GDP in New Zealand. Now, we don't really trade this one with the with Nadex, but again, GDP quarter over quarter, expected to be good, but this could be a big disappointment. And then unemployment change and unemployment rate. For those of you that are still not on board, you gotta trade the Aussie. I don't care if you guys say I don't like Forex. I'm not a Forex trader. You guys absolutely, without a doubt, you guys have to start looking at this thing at night. Okay. The more people I get to check these out at night and start trading them at night, they absolutely love them. It's one of those things that at night will provide enough movement because the European market is open. It's big. It's a great trading opportunity. If you're not looking at it, you're just basically saying that, hey, listen, I'm not interested in good opportunity, right? It's a great opportunity, guys. And again, Nadex has plenty of products on the Aussie. So unemployment change, unemployment rate, these are big Australian numbers, and it's at night. So again, you're off work, you're at home, it's after dinner or before bed. It's a great time to really get in there and experience new things with Nadex. So again, both these numbers are great. Again, you guys can see here the unemployment rate. It's been they have a hard time pinpointing exactly what it is, right? Unemployment change, and you guys can see they only are hiring 40,000 people back, and this was they missed this one pretty bad. So there's catalyst there, there's potential there to be able to trade this tomorrow night. Going into Thursday, again, another full day. Birds are jacked up on sugar. On Thursday, we have some news that we don't normally get. Now we have some news in the Swiss, right? The Swiss has been very beneficial late, or has been benefiting from no news is good news lately. And again, it's kind of like if you're keeping your head down, it's been like the safe way to kind of do things, right? Because if you're not reporting any bad news, what really could go wrong, right? And that's the way that's been taken. If you've been watching the dollar Swiss, it's been just kind of grounding down, 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 lower, lower, and lower. Are they immune to the coronavirus? The answer is no, not at all. But without hearing any data or bad news, it's kind of one of those, again, no news is good news. Then at 7 a.m. on Thursday, we jump into the monetary policy summary. And again, we're already at point one that they're not going to drop this rate any lower. But the monetary policy summary is pretty important because we're going to be able to glimpse into what do the kind of their version of the Fed, what is it that they are looking for as far as recovery? Will there be a Brexit deal done by that day? Maybe. Will they mention Brexit? Probably. Will they be able to report on a signed agreement? Most likely not. But they may provide a couple different scenarios, and again, could be a very powerful statement. 8:30, we have the unemployment claim number. Now, we were watching unemployment, and we saw this number on December 3rd come down to 712, and we're like, whoa, that's great, right? Less people by like 60,000 were, trying to claim unemployment. That's wonderful. And then December 10th, we got smacked the other way. We had 130,000 miss. Now, they're leaving the forecast high back up at 820. Again, that's quite a large number. You can see the forecast hasn't been that high for a while. And the question is, will we miss again? What happens if we come in at like 900? What is that going to do to the economy and the overall markets for the day? So Thursday is another one of those days that this is a pretty big number. And again, this will be something we're going to have to analyze on Thursday morning for our 9 a.m. session, because again, we would just see that number and the market will absolutely react to that. So that's going to be a big one on Thursday. And then again, monetary policy out of the yen. Friday, again, everything is orange here. I don't see Friday being as big of a trading day. Again, retail sales is going to be important for the pound, but any other time, I would say that this would matter. But because it's a Friday, because Brexit is right there, because we're getting close to that Christmas holiday, could Brexit be in by Friday? There could be an agreement in principle, right? But they're seeing retail sales go down as well. So again, another negative factor for the pound. And again, with a lack of Brexit news, could this send the pound tumbling? Absolutely. Absolutely. And we also have it with the CAD leading to, and then obviously bank stress test at 4:30. Really, it doesn't really pertain to us at all because markets are closed at that point. But again, next 3 days are kind of chock full of news releases. So a lot going on there. All right. So let's dive over. Let's jump into the indices and let's go back and we'll look at NQ first. So, first thing at a higher, kind of looking time frame, this is the 4-hour time chart, right? We've drawn out the curve basically mentioning, between this all-time high area, kind of up at like the 12,621 area, and really the 11,836 are probably where we're putting for our range as far as kind of a top and bottom channel where sellers or buyers have stepped in. Dropping it down to a lower time frame, let's bring it all the way across and bring it up. You can see that we've been kind of channeling back and forth a little bit. We've seen a nice little pop, and then we had kind of a retest off of that. Looking to the left to find areas for sells, you can see that we don't really have a lot of wicks. We don't have a lot of pullbacks, at least on the 30-minute chart, at least until we come up to the 12,621. Now that is, kind of the extreme of the curve again. We're looking for, decent selling, and we've kind of, we've had that. We've had a nice little. I mean, this is that little pattern that I like right here. Again, I'll just put this across, but I love the way that this candle formed. I like that it came down and retested. So really, 12,621. Up here at 12,656, I'd like this area a lot up there as far as kind of giving us some resistance. Now, catalyst that could drive us through this number, obviously stimulus. If you're going to give people money that's going to drive the markets up, that's a factor that, really at any point it could come. Until they tell us it's not coming, there's no reason not to believe that it's not going to be here. Now, do I personally think it's going to come in 2020? The answer is no. I think it's too late to get a process. It's not going to make a difference. I had originally thought after the election, or once the election kind of was fully certified, I thought we'd hear a lot more about it. I thought they would really, again, to help struggling retail sales numbers, I assume that they would get this out before Christmas so people could get out there, do their online shopping, get things delivered by Christmas and use it, but doesn't seem like that's going to be the case. So now it seems like it's going to be an early, I don't know, early 2021, maybe near, inauguration day. Maybe it'll be like my first executive order, besides the student loan debt is going to be stimulus, right? Is going to be stimulus. So, we'll see what it is. But right now on this one, I'm kind of looking for, decent pullbacks into this area, maybe a little bit lower. As always, 1220 is a little bit hard to be able to get into a day trade today. Most of the movement, as you can see, has already happened this morning. Nice little bounce here that was late last night. And again, here was kind of the fall from the open, right? The 930 kind of collapsed down, and now we're retracing back up and really kind of putting us right where we were at this time yesterday. So, down into a level, right back up, and we're the exact same place that we were sitting. Here's where we were yesterday at the same spot. I mean, it's literally almost at the same spot. So, unfortunately, this is December trading without any true catalyst, without any economic news. Everything is really, hey, this is great. Oh, no, this is bad. Oh, this is great. And again, remember, it's all about fair balance. The S&P. Here's the S&P chart. Kind of the same thing. We're obviously very, very high on the curve. This one, again, has had kind of the same little spike. And again, there's a zone there. It rolled and went all the way down and is now kind of retraced halfway back again. If I had to draw the curve on this one, and again, remember, for those of you that are new to the curve is really signifying where my bullish and bearish bias would come from. I'm definitely one of those believers that things tend to revert back to the mean. Like, I'm very big into statistics and trading. Talking about, stacking odds in your favor and not so much odds, but stacking probabilities and things like that in your favor. We're kind of stuck in the middle, and you can see that there's not really been, it was a strong push down into the bottom, and then we kind of rallied back up, and now we're just kind of chopping back and forth. Reason why is we really don't know what's happened with stimulus. We know that the vaccines are out there. We're waiting for an approval from Moderna. They got the FDA clearance to go ahead and put in for emergency response. But besides that, what is it really telling us about the economy? Nothing. We don't really know much. So, ways to play this. And again, 3714-ish area up top is great. This being, again, you saw that we had this over here. We've taken a few bounces off this level now, but this 3645 level, we've taken 3 bounces. So, again, watch it. Maybe bounce one more time, but at this point, to be a bit more conservative, I'd probably bring it back down into this 3635. And again, you can see that we had a drop, a base, and a kind of rally off of that. And what happened is it came back down and tested, showing us that, hey, listen, this is not just a made-up zone. Buyers have stepped in and actually wanted the purchases and protect it from going lower. So it's another area that I'm kind of looking for here down low on the curve. Now, will it hit today? Unless there's something blockbuster, no. It may be a tomorrow morning thing, but these are both levels that we could have price drive into before all the news kind of cranks in tomorrow. And again, that's always a good sign. Looking at the Dow. So the Dow, kind of the same thing, kind of some channeling. Now, the Dow's a little bit different. This is a 15. Let me go back up to the 30-minute. You can see that the way that this formation is with the Dow, we had this drop, and then there's a lot of wicks. And I would call this being furry or kind of like a sawtooth or shark tooth kind of pattern here. And what it is what you can see is we have wicks and then wicks lower, wicks lower, wicks lower, wicks lower, wicks lower. These are, every time I try to push higher, buyer stepped in, buyer stepped in, buyer stepped in, buyer stepped in. And that's why we had a lot of problems going here. Now, there was a small trade entry this morning. And, for those of you that were trading it, this is about that 10 o'clock, 10:30 reversal time. It needed to go a little bit more for me. I don't even think on the 15 it hit. No, on the 15 it did. It needed to go just a little bit more, but this is a typical morning reversal. You have the initial reaction off the open, and then what happens? Okay, the initial kind of emotional response is out, and what do? Boom, it retraces back up to where we were. At this point, I'm kind of looking at these two levels and saying, hey, listen, if we can rally up into here, and again, if it goes up in a really, really fast green, again, we're looking for kind of a confirmation entry to short around that 37, 275-ish level. But on the flip side, again, we've seen buyers step in. We've seen a front run here. Down in this level in the 29,864 is probably a decent level. As well as we've seen buyers step in here around 29,840. So with economic news tomorrow, the markets tend to be not as active when we don't have news. With news finally kicking in, there'll be people really ready to trade news tomorrow morning. So again, this is an opportunity. If we can be at one of these two extremes tomorrow morning, maybe look for some knockouts or look from shorter duration binaries off the open. I mean, you can see how much movement we've had. Just off the open, we're up here at what? 375 all the way down to here. You're talking about what? Almost 200 points just in the kind of the opening hour and a half. So again, a lot of movement, very, very fast. Those shorter duration binaries will help you take advantage of that without paying kind of the long extended range premiums. All right. Now, let's switch over and talk about some of the currency plays. Like I said, right now, either of these I'm kind of waiting. 12 o'clock is typically not my favorite time frame to trade them. But if we can get up top or below here tonight, after the contracts reset in the afternoon, there could be an overnight play in here as well, kind of bringing us back into that middle kind of, basically the middle of the curve, right? Going across to the Aussie. So the Aussie, for the most part, has been bouncing, again, also channeling sideways. Here's a Sunday gap. You can see it came down, went right back up again, came down in that same level, it pushed a little bit lower, came back. So it's been sucking back and forth in this kind of same range. Right now, let me see, right now, in the last 24 hours, this pair has only moved 12 pips total. Okay, so is there a lot of trading opportunity in here? No, not really. But I will say this. When I'm saying there's no trading opportunity, I'm kind of talking about has there been a lot of movement up or down that you could use binaries or call spreads and your traditional thinking with knockouts, right? Answer is no, but is there cool other things you could do to trade to still make money with them? And the answer is yes. I believe actually Dan is going to talk about some of those, but again, my students, you guys know what I'm talking about here. But when things are not moving, there are still ways to use Nadex. It's not just about going, 90 or 100 pips in one direction. There are other kind of creative ways to do it. So again, giving a little plug. I haven't seen Dan's deck, but I know what he's talking about. So if you guys are here today, I'd log in Wednesday or Thursday to kind of see. I think he's talking about a strategy that will help you play in an arena like this when you only have about 10 pips worth of movement a day. So right now, larger time frame, again, high on the curve. I'm in the area where I'm thinking, hey, I got to be bearish minded. I'm looking for short opportunities. 75.70 is one of those opportunities up top. You can see that last time price was there, decent push away, and then another one up here at 76.27. Now, also again, the same thing. Again, from the two buying and selling here, we're talking about 30, 40 pips. This one has an ATR of about 54. So, it's moving in a decent way. It's been kind of hard to grab. You can see it's chop down, chop up, chop down, chop down. This one will be a mover tonight because of, again, the Australian news. Okay, or actually tomorrow night. The Aussie dollar and the Aussie yen are my two favorite pairs to trade at night, but Aussie yen has been one that's given pretty decent movements. And you can see there's some pretty big pushes here back and forth. But if we continue to rally up today, 78.62 is a decent level to take and look for a rollover. As far as downside goes, would we buy in either of these levels here? Maybe, maybe not. I would need some type of confirmation. My next real level is kind of really sitting down here, 77.50. And the reason why is because price came down, and actually it would be a little bit lower than that. It would be right here. Yeah, around 77.50. That would be fine. Again, price came down, halted its retracement, based, popped, came a bit lower, and then launched itself higher. Okay, so again, the only way to get this type of reversal and then candles this large is massive buying pressure, right? Massive buying pressure. So that's where I'm kind of looking right now. 78.62 this week, 77.50 on the bottom side. Euro yen also a blaze of excitement. If I make it stretched out really, really big, I can kind of make it look like it's somewhat important. But the reality is it's not. If I take extreme ranges top and bottom, yeah, it's 90. But it's literally just bouncing between this channel sideways. Now, we're sitting in the channel right now. Is it an area we want to typically go long in? Not really. It's taken one bounce, although it pushed very, very deep, and we got a little bit of a confirmation here. The way that this looks right now, I would say that I'm still sort of looking for this to take short, going from the high curve lower, and this is kind of what it looks like for me. You guys can see that I've drawn a box down there. What I'm doing is there's a level here, and actually I'll just go to 4 hour and do it. You guys see this level here? Buyers have stepped in, buyers have stepped in, buyers have stepped in, but really just push it to the brink. What I'm looking for is a break of 125.78. I'm looking for that to collapse back down. Now, there's a 1 to 3 sitting right here. There's a 1 to 5 sitting lower, and that 1 to 5 is kind of right around this little precarious kind of wick over wick at 124.94. But it's pretty decent move. It's a pretty decent move to the downside. If it turns from here and goes higher, no harm, no foul. What I'm looking to do is kind of set alerts sitting right in this level at 125. Really, 125.75 is an alert. Letting me know that, hey, listen, it's broken that level. Come back, look at the structure, look where it based, see if you can adjust this one. and then be willing to take a short, and is kind of what we're looking for. Now, tomorrow morning is all that European services data. If Germany comes in bad, guess what? This will go down. Okay. Um, again, weak European data. European pairs the first one, kind of set up on a fundamental basis as well as a technical to take this and roll back to the downside. So keep that on your radar. Pound yen, you can see that this one is, Brexit is happening. Brexit is not happening. We're not sure what's going on. Oh, Brexit is happening. Oh, not happening. Oh, wait, no, it is happening. And then we go back up. And now we're just kind of waiting to hear what is next, right? And I say that, I'm like, well, what is next? Well, we don't know. Is there hour and 22 minutes ago is when we got that rumor that Brexit was going through. It's been an hour and 22 minutes, so we don't have a signed deal. With that said, at this point, if there's no more rumors for the day, I would assume that this will kind of roll back to the downside. Now, just like the euro yen, I kind of have a position here lower. That, again, we've seen buyers step in. This was the gap from the weekend, right? Rallied higher, kind of took a confirmation bounce here, bounced again, and it pushed it really literally to the brink. So what am I looking for? I'm also looking for some type of a breakable level here. I'm looking for a retest back up again, right? And then I'm looking for a short. Now, how do you play this one? Again, a lot of this is going to depend on timing. The UK market is basically closed at this point. There maybe is another hour to get some headlines, maybe another hour, 2 hours to get some headlines. But if you're looking to get into a position and we have no new news, tomorrow morning at the UK Open could be an interesting way to get some trades on. Now, remember, we have 3 different ways to play the pound. It's having massive movements. In this case, when we heard that rumor, this one had about 90 pips worth of movement in about an hour, hour and a half. You can see coming back to here, right? This was in the morning time. This was from the UK Open right here. And that provided in what, 1, 2, basically 3 hours, 4 hours, about another 90 pips. So you can see when we get news, there are massive, massive movements in this one. If you time that with things like a UK Open, when you know there's going to be European quotes, again, this is one of those arenas that call spreads or binaries tend to work pretty well because, again, you're going to have massive movement and you can get something maybe a little bit farther out of the money to take advantage of that, and it lowers the risk per contract. Now, I will say, right now, the pound yen, I'm being a bit more cautious with knockouts. And the reason why is this. Do we have a little bit more chop right now? Yeah, I mean, these are big movements, but there's chop back in both. I mean, this is great, right? But this thing dropped about 15 to 20 pips just off the good news because of the buying and selling and things like that. So knockouts, again, not having that extra precaution, when it goes against you for a little bit, I find it with the pound yen is a little bit more difficult right now. So I'm looking at more of the first 2. But again, could we, if this rallies higher, could we take shorts off 139.60? Yeah, it's not a bad spot, right? Could it turn and roll over now and then we could take this confirmation tomorrow? Yeah, I could do that too. I could see that also. But I will say this. Make sure in any of your shorts, make sure you are out before this 37.61 level. Okay, that's where the gap happened from Friday. It's typically a good telltale sign that there are some buyers sitting that low. Now, pound dollar looks almost exactly the same. This one gave us the break, but never gave us that pullback confirmation. It was literally a spike down and spike back up again. This one did go off to 134.52 level. Again, nice little setup. Last time price was there, had a decent base, decent drop down, and it had been tested one time and caused a big reaction. Being in the kind of upper, the upper half of the top third. Again, another typical sign that, again, we want to take somewhat of a rollover target. This isn't supposed to be there. So this one, again, I'd be looking for a retracement back down really in the next 12 hours until the UK Open. And then again, if we can get a break of this level here, which is a break of 132.90, again, look for this to rally back, not rally, but look for it to continue falling down to the 132.27 range. About 40 pips to here, and then back to the gap is about 70. Now, Brexit gets solved. All this is, again, these are all small levels. This thing will spike about 100, 150 pips. But again, I'd be looking for, if we get a gigantic spike like that, look for stabilization and look for a retracement back down again. Because just because they got a trade deal, they got many economic problems beyond what Brexit is right now. But in the next 24 hours, I'm looking for this to roll with no agreement. Now, euro pound, kind of the same thing, right? Brexit is good, Brexit is bad. It's on, it's off. We're meeting, we're not meeting. It's literally been going back and forth pretty easy. As you can see, this one is going down. Why? Because, again, everybody is positive about Brexit yet again. Yesterday it was like, oh, nothing's getting done. We're probably going for a hard exit. And it rallied back up again. You can see we talked about levels at 91.55 or 91.50, really, for the round number. And you can see we touched it. All of a sudden, magically, there was news that, oh, wait, Brexit could be back on again. And then, boom, it continued to push to the downside. So I think right now, I think this 90 or this 89, 98 down in here, this is a decent level for kind of a reversal. If we continue just to slowly push down, again, European market open, this could be a very interesting place to take this. The one caveat I will say with this is tomorrow, this one could also turn into a tennis match between France, Germany, the European manufacturing numbers, and then we have the pound manufacturing numbers right after it. It literally could be a spike back and forth. So, you know, confirmation bounce off this 90 is not bad. If we can get back up to the 92.09, probably also a decent level. But I would watch this little speed bump here at 91.50 when we get back up into a third of this curve. Now, euro dollar. Euro dollar is now moved 7 pips in 24 hours. So again, it's blazing. It's going crazy. But I will say there was a nice trade, and let me stretch this out just a little bit. There was a great trade this morning. 7 a.m., we ended up running into an hourly zone that had a really strong push to the downside. It had been front run here, front run again, and it was kind of struggling. It's like trying, and it finally touched at 7 o'clock, and bam, cranked to the downside. Now, this is a decent trade. You can see it did go right to its 1 to 3, went actually a little bit past it, where you see these ascending wicks, and then rolled again. So kind of the same thinking right now. To me, this one looks like it does want to roll back to the downside. You know, I have the curve, like kind of the intraday curve level drawn at 121.77 and the 120.50 down low. But I do think there will be some interesting buying coming in at approximately probably this 120.81 level. It was an area where we rallied up, we based, we popped off of it, and it came back and retested twice, but both times it had great reactions off of it. So, you know, any type of a short position here, again, make sure you're collecting your profit at 120.81. But I think overall, you know, between these two levels, I think that the 2050 is a better entry than the 2080. But that doesn't mean we can't get a bounce, you know, especially with the European Open tomorrow. You know, if we're that far. All right, dollar CAD. Now, dollar CAD. You guys have heard me mention it week after week. You know, remember that parabolic retracement thing? I mean, again, a large move down into the level, rally down, all the way back up. Huge sponge up. Once we got our topping pattern, again, here's the weekend. We retested the weekend gap all the way back down. Huge burst up again with news, and what has it done? It's retraced all the way back down again to this level. So on a larger time frame, we've mentioned this before, and again, you can see it really here. Down, we went right back up. This big spike, we went back down. And again, spike up, retracement. Spike up, retracement, right? Big drop down, we've retraced about half of the way, and again, the seller sitting right here. Big spike up, boom, retraced again. Tomorrow morning, there's CAD news, there's oil news. This one will be a pretty interesting mover. On a larger time frame, you guys can see, actually, I'll go up to a daily to kind of talk about it. I don't have any decent large time frame levels until 125.68. Although we're low in the curve, and you know, somebody will say, well, wait, you said low in the curve, we should be looking to go long. Yeah, typically, but I think everything right now with oil prices, you know, going higher than what they have been, with kind of the U.S. numbers not looking great, with COVID at like record highs, I feel like this one just keeps punching low. And again, 1, 2, 3, 4 was the break. 1, 2, and we're at number 3 right now. Are we going to break through this next level? I feel like we are. So this is one of those ones that, although it is low, I should be looking to go long. I'm not looking for a long until we drop another, I don't know, about 170 pips on this one. So I do feel like there is still some negative to the downside on this one before we get a decent level bounce. There's just nothing sitting down there looking the wicks. It was a big spike through. So that's how I'm playing this one. And again, even on a 30-minute, you can see there's been small, decent levels. You know, there was an hourly level here where we came up and touched it, So, you know, this has been an early morning mover. Has been the way to play the dollar CAD. Dollar Swiss. So I mentioned this. This is the Swiss being out of the news, not really talking about it, and it's just going lower, 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 lower. And this is kind of in the same situation as well. You know, you can see this level down here. Let me bring the price tool out. You can see 88.50, again, psychological level, ending in 50. We hit it here, we bounce. We hit it, we kind of came up and we ran along again. We ran it again, touch it again. So there are definitely buyers stepping into this thing. And I can say definitely because it didn't go lower here. It didn't go lower here. It didn't go lower here, here, or here, right? But those buyers are not going to be there forever. So I'm kind of looking for a break of this area pretty soon. I think, again, this is a higher time frame. This is a daily level at 87.91. I'm looking for this to kind of grind its way down. I don't know. Let's see. We're talking about, it's about 50 pips. If we can get down before that Swiss news, I would love to take a bounce like that off of that level. But we're going to need some help. We need some kind of U.S. weakness this afternoon. We need this to kind of grind down in the overnight. And again, we need a little bit more help on this one before we can take this long. And again, extreme range of the curve, daily level, large time frame, pushing from low here back up into that middle of the range is kind of what I'm looking for on the dollar Swiss. Now, dollar yen. Yeah, dollar yen, I had a position that I was looking for. This 104.25, I really loved the level. Thought it was great. I love the retracement up. I was like, yep, here we go. Just go look a little bit further. I know there's a gap here. There's some selling here. But looking to the left, I was like, listen, I just need to go just a bit more. I love this level up here. Unfortunately, I missed it by about 10 pips. So since this large pop, it has retraced back down again. This one has moved 30 pips in 24 hours. Again, to the downside, you can see it's pretty much been straight down from where it leveled. And it's only because we had one pop, a day of no movement, and then a day of straight down again. But we are approaching that same level, and I think that we may have a bit of a retracement. With any lack of true U.S. data today, this 103.61 will probably be where we kind of base and start kind of ebbing and flowing sideways. Is it an area we can go long from? Maybe, but for us to go long again, that's going to be more yen weakness, dollar strength. It's not the worst of levels, but it's also not the best. And I still think the way to play this curve is 103.27 is a good, a level that I'm definitely interested in. The 104.25 on the top, definitely interested in that. And then again, a bit above that, the 104.62. So a couple different things. This one, yeah, we're 47. Excuse me. This one has dropped down to 47 pip ATR, so it's getting very, very small. You may say, why does that 47 pips matter? Well, when you're looking at a daily, like a daily binary, you have to look to see what the strike differential is. How many strike prices can it potentially move in one day? And you got to rate whether or not that is worth trading. And again, if a daily is not there, maybe you need to try a smaller time frame with a smaller strike differential, right? Or a strike width, I guess, is the correct term that Nadex uses for it. Because if it's only going to move 2 in a day, you got to be very cautious in where you set your binaries. Because again, what will happen is if you get this, you're in major trouble. It's not moving unless you get something that's at the money. And again, at the money, you're taking more risk on it. All right. So dollar yen has been a little bit more challenging. Again, it's been big move and then flat, right? Big move and then flat. But tomorrow should finally provide some catalyst with some U.S. Economic news out there. Now let's go across to gold. So gold, yeah, gold. Earlier today, I mentioned, hey, listen, if we can get up this 1860, I'm all over it. And we got to 1855. We missed it by about $5, and it kind of rolled and flipped on us. Here's a 15-minute chart. You can see, you can see that there was a level put in, this basing and drop and kind of pullback. That basing came in right about when we were talking. We were starting to see it pull away. So this trade actually occurred entry about 10 o'clock, and now it's just kind of basing sideways. What gold is waiting for is news of inflation, news of stimulus, and particularly FOMC notes tomorrow, okay? So for me right now, I still do think this 1860 to 1870 range, there's a lot in there. Again, large movement off the 1860 level. The 1860 level was actually a retest up here of about 1865. If you look up to this 1870 level, you can see that was the last time we kind of had this rollover. It was doing this kind of grind down before popping. And again, came up and kind of tested this level here. So there's a decent amount up there. Down, looking for decent longs, again, 1818 down below would be kind of an extreme. Do I see us getting to 1818 in the next 24 hours? Probably not. We would need a pretty big catalyst for that to happen. I don't know. I mean, tomorrow morning's news for the U.S. is decent news. I mean, it is PMI data, but that's a pretty big move. I really think the way to play this one is going to be kind of early morning, see where we're at, see if we've rallied back up in this zone. And again, these are levels that, I believe there's a knockout. I think there's a knockout or a call spread up here at 1870. The closer we get to it, it lowers our risk. Obviously, stimulus, this one is it's going to jump. This one is going to go higher. But where we are now, it's been grinding up. And again, we're not seeing great news. We're seeing more people get unemployed and things like that. Again, seeing these 3 wicks is typically a sign that there are some sellers sitting in there. And again, you can see the line, you can see the zone there. Yeah, I just feel like, this one is kind of setting itself up for, some type of a short position. And again, those are right around 1853-ish, to the downside. So again, it's not bad. Silver, okay. Silver, oops, I thought I moved this over. So silver's been able to rally back up again. Again, we were able to get through this 2430 area. We had a little bit of a push down, and now we're actually banging into a 4-hour zone. I don't know if you guys can see it here, the dotted lines. So this is where a 4-hour zone starts. I like 4-hour zones. Is it huge in this case? Yeah, it's pretty big. It's like a 35-40 cent zone, so it's not necessarily anything I'm willing to take the entire risk level off of it. Kind of what I'm looking at right now is I'm looking at, and let me move this across for you. The 2490-ish area, again, puts us in this kind of upper extreme right here. And again, vice versa on the other side, there's our kind of bottom section. So I'm kind of using this curve of 2490 to 2360 is my kind of top and bottom kind of gauge. We're right in the middle. I'd like this to go a little bit higher. And you can see on the 30-minute, there's no true levels in there. And even on the 15, there's this little kind of a hiccup level at the 2456. But I don't know if it's going to hold if it touches it again. I just don't have much faith in it that it will. So, right now it's kind of, I'm looking for this kind of high pull up. Obviously, stimulus does a whammy on this one. It will jump this one higher. Of the 2, gold and silver, again, I think gold is giving us better trading levels right now, especially with this one being kind of in the middle, chopping back and forth, with sellers kind of stepping in as soon as we, jump up into this 3rd area. Okay, so just a little bit, just something to watch out for as far as silver. Don't like it as much. All right, so now I got to find it. Let me see. Is it this one? Nope, it's not that one. Here it is. There we go. And here we go with oil. All right. So earlier today, I mentioned that we were kind of probing up into this level, right? Now, we ended up getting a drop down to about 47.38. When we talked this morning, we were sitting up here at about 47.60. So got about a 30-40 cent drop to, actually, it was here early morning. This was 8:30 when we talked, right? Yeah, it was 8:30 here. This is when Todd and I were meeting this morning. And, we dropped back down and we've now rallied up and we've kind of put in an interesting pattern. Like, this is what I would call a true failure to go higher scenario, right? So let's pull this across. Let's bring this up. Needs to go a little bit lower. Right there. I kind of like where we're at. As I said, we got a 50-cent move down and then a rally back up again. We've seen sellers step in here. We got front run again, seen them step in again, and now I like the pattern that we're seeing here. On a 15-minute, I'd probably keep the same thing. I'd probably draw from the same level. Again, I like how the wicks are down. I like that we've been here before in the past. For me, again, high in the curve, in the extreme, looking for price to rally back down again. This actually doesn't need to move this far. Whoops. It needs to move that far to be viable. And again, that's a decent level. That's the last time buyers stepped in. So, it's not horrible. This one, again, at 1 o'clock in the afternoon, this is always a harder one to do analysis for right now. I don't see a whole lot of cat outs. I don't think, let me see, let me check it real quick. Not today. Tomorrow, let me see, have they given us, I want to see if they gave us the forecast yet for oil. Let's see, apply. Tomorrow morning, 10:30, yes. So tomorrow, here is what the current forecast is, that we're going to be down 2.8 million barrels. Last week was an absolutely just huge miss, right? Huge miss. They were expected to come in at minus 0.9, came in at 15.2. They're expecting that we're going to be down 2.8 million barrels. It's an interesting call. Interesting call. Now, if this comes in big again, that kind of also goes into kind of what we're thinking here, right? A lot of supply, extra supply a week again, and this could drive back down again. It's always nice to see it the day, but the way to play this always is to log in about a half hour before that news, check to see where price is moving right before, like 15, 20 minutes before news, and take it from there. I'm going to keep an eye on this one. Again, if we are unable to breach through the top of this one, going into the UK Open could also provide some great kind of negative pressure on this one. Seeing services and manufacturing lower than what the forecast is also doesn't bode well for overall demand. OPEC came out with a statement as well, I guess it was yesterday, the day before, talking about they're adjusting their forecast for 2020. Not that there's much left in it, but that it was lower than expected. That kind of gave us a little bit of a drop. But right now, again, high on the curve, decent level of decent level of sellers in the past, like the formation here. Again, you can take this short or wait for the oil inventory report tomorrow, particularly based off of that oil inventory report. So with that said, guys, that is all the charts as far as today. Mark off next week, Tuesday, December 22nd at 12 p.m. Eastern. We'll break it down again. Don't forget, we don't have a session tomorrow morning at 9 a.m., but we will be back on for Nadex on Thursday morning. So again, things to remember tomorrow. Let me just bring this right back in before we kind of close it out for the day. I'll just go to this. This is what you're dealing with tomorrow morning. So again, early morning, it's all the European manufacturing and services. Then when they kind of roll over after the pound, then we go into the U.S. data, Canadian data, U.S. data, and then again, be very cautious with FOMC projections tomorrow. It's just kind of crazy. Look at this cyberpunk debacle cost founders $1 billion of wealth. I wouldn't call that big. It's a great game. I wouldn't call it a debacle yet. They had some issues, but hey, it's 2020, right? There's been plenty of issues in 2020. What are we gonna do? So anyway, guys, you guys have a great trading day. If you have any questions for me, you're more than welcome to visit the website. You can message me at support@keeptradingsimple.com. That's probably the easiest. Or you can check out the YouTube channel. I don't post as much over there. I do most of my broadcasting and stuff on Twitch or through Nadex. So, guys, thank you so much for joining me. You guys have a great week, and I will catch everybody on Thursday. You guys take care.